In today's video, we are going to talk about how the market is reacting with the new power to be, how the tariff could and will impact the markets, and what does it mean for you. We will also take a look on how this will affect your portfolio. All of that. Join us back now. Stay tuned. So, as we all know by now, we have a new president in power. And with that, we have a lot of new changes that are being implemented within the next 100 days. One of those changes is tariff. When tariff taking the front line, we can see how the market has reacted. President has introduced tariffs on goods from China, which has hit back by announcing similar charges on some US products. Trump has also threatened to introduce tariff tax on imports coming from Canada and Mexico. The president has said tariffs are needed to help the American economy and to protect the country from the major threat of illegal aliens and deadly drugs. So how does the tariff work? Trump introduced a 10% tariff on all goods from China. So, a product worth $10 would have an additional $1 charge applied to it. The president originally said he would impose a 25% tariff on goods from Canada and Mexico. Trump is fulfilling a campaign promise of introducing import duties against some of America's closet trading partners. A 10% charge on all goods imported from China to the US took effect on February 4th. In response, China said it will implement a 15% tariff on US coal and liquefied natural gas products from February 10th. Crude oil, agricultural machinery, and large engine cars will see a 10% tariff. To be honest with you, trade and tariff wars have no winners. So what products will be affected? Car manufacturing could bear the brunt of the effect of tariffs. Vehicle parts cross the US, Mexican and Canadian borders multiple times before a vehicle is completely assembled. The average US car price could increase by $3,000 because of the import taxes, financial analyst. Other goods from Mexico which could be affected include fruits, vegetables, spirits, and beers. Canadian goods such as steel, lumber, grains, and potatoes would also be likely to get pricier. Canadian energy would be tariffed at 10% instead of 25%. Do tariffs cause inflation? Economists suggest that a portion of the cost of tariffs ends up being paid by consumers. Sellers may and will raise the price of goods they are importing. From 2018 to 2023, tariffs on imported washing machines saw the price of laundry equipment rise by 34%, according to official statistics, before falling once the tariffs expired. Some experts suggest that these new tariffs could prompt a wider trade war and exacerbate inflation. Inflation could increase from 2.9% to as high as 4%. Tariffs typically have a negative impact on the stock market by increasing uncertainty, potentially lowering corporate profits due to higher input costs, and causing a ripple effect through the economy by impacting consumer spending, which can lead to decreased stock prices for companies heavily reliant on international trade. Essentially, tariffs can create a risk-averse environment for investors, causing them to sell stocks. Tariffs can also impact exchange rates, which can further complicate the situation for companies with international operations. So, how do you protect your portfolio from tariffs? Number 1, diversity. Your investments across different sectors, industries, and geographic regions to mitigate the impact of any single industry being heavily affected by tariffs. Number 2, consider including inflation hedges like commodities or real estate investment trusts, REITs, in your portfolio. And number 3, maintain a long-term investment perspective to avoid panic selling during market volatility caused by tariff news. Key points to remember: diversification, analyze industry exposure, consider domestic-focused companies, inflation hedges, and always stay alert to news and developments. Avoid panic selling, invest in companies with strong pricing power, consider defensive sectors, and explore option strategies. I know this might look like scary times, but believe me when I say, If you follow these guidelines, this will reduce your risk in the market. Thank you for watching, and remember, more gains, more gains, more gains, giving it your maximum effort.